in this lecture we will jump into some advanced stuff of Elliot wave, and I have decided to divide it into two parts. First we'll discuss about the impulse wave variations, and in the second part we'll discuss about the corrective wave variation. So far we all agree that what Elliot wave is. Let me just draw it for you. So Elliot wave contains two parts. One is the impulse that we called as 1, 2, 3, 4 and 5, and the second part is the corrective pattern or the correction that we call as A, B and C. So in the first part, impulse wave variations, we will discuss about the variation of this impulse wave, and in the second part we'll discuss about different variations that you can see in the corrective wave. So far we know that the impulse wave contains motive, corrective, motive, corrective, motive wave that we call as 1, 2, 3, 4 and 5. So this is the normal variation, normal form or normal shape of Elliot wave that you will see more often. But it is important to understand that this is not the only way you will see the Elliot wave. There are a couple of variations. Let me just keep it here. But what are the other variations? Well, there is a variation that we call as leading first wave diagonal. Leading first wave diagonal is when the first wave is impulsive. Remember we discussed about the Elliot wave and we said, well, the third wave is impulsive. If you see here, we said the third wave is longest of all waves. So this is the normal form of Elliot wave where the third wave is the longest. But in leading first wave diagonal, the first wave will be very aggressive. So as a result, what will happen? The third wave becomes the second longest and the fifth wave becomes the shortest of all. We call this variation or this type as leading first wave diagonal. So keep this in mind. Now, when you talk about the retail traders who are trading based on the patterns, they like to trade a pattern that they call as the rising wedge. Rising wedge is something like this, where you see this type of shape, that the price will come here and will form this type of pattern. How the pattern is formed? Well, you will see these waves on the chart, and when you combine the highs and lows, so for example this high and this high, you combine this and you combine the lows, this low, this low, so what you will get is a rising wedge, something like this. But what we are trying to do is we are trying to understand not in terms of pattern but in terms of Elliot wave. So what we are saying is that the leading first wave diagonal will find the first wave as a most aggressive wave. The first wave will go very aggressively. Then wave 3 will be the second longest, and wave 5 will be the shortest wave. And when you will combine the highs and the lows, you will see this wedge pattern that we call as rising wedge. And how we trade that? Well, rising wedge always break to the downside, so we short it. The leading first wave diagonal will always occur in the first motive wave of the impulse. In third wave, you can never see the leading first wave diagonal. This is not possible. Third wave will always be impulse wave up, normal wave, okay? So you will see 5 sub waves inside without any leading first wave diagonal. If you see the leading first wave diagonal, just keep in mind that it is not the third wave. So leading first wave diagonals occur in the first wave. The same thing, same variation or same pattern of Elliot wave occurs in the fifth wave also, but here we will not call it leading first wave. It's the same pattern, but it's occurring in the fifth wave. We call it ending fifth wave diagonal. So this here will be called as leading first wave. So it occurs in the first wave, and when it occurs in the last wave, we call it ending fifth wave diagonal. So keep this in mind. Leading first wave diagonals occurs in the first wave, always first wave. Second wave will not have any leading or ending fifth wave diagonal. You will not see that. And also it occurs in the last wave. But when it occurs in the first wave, we call it leading first wave diagonal. And when it occurs in the last wave, we call it ending fifth wave diagonal. These patterns are my favorite to trade. I never miss these patterns. Whenever I see leading first wave or ending fifth wave diagonal, I always short the market. So let's see this on the chart. The market went up, went down, never retraced 100%, so we can clearly call it 2. Then the market went up, and now we are at this stage. Now we want to subdivide this part. Let me just highlight it. We want to subdivide this area and see that what is happening in there. So let's just reduce the opacity. So this area only. Now, if we see closely, we can see that there are definitely waves in there. Let me just go to 3-day time frame. So let's see. We can clearly see here 1, 2, 3, 4, and 5. So this makes this as a complete wave. Okay. Let's just choose a different color. Let's choose this one so that it's more clear. So we can call this as 1. So I'm just making sure that I choose the same color so that there is no confusion, right? So we clearly have 3 subwaves, 1, 2, 3, 4, 5, and we then see the correction. So it's ABC. We'll go into details of corrective patterns later, but let's just call this as 2. Let's see now what happened after that. Now, can we see here that we clearly subdivide? We can clearly subdivide this also. By the way, red and green colors will make it easy for you to spot the waves. So we can clearly see in the next wave, that will be wave 3, and we can clearly see we have this 1, 2. You see that it's very weak, 3, 4, and 5, right? Now, we can clearly see that this is the longest wave. So this you can say as wave 3. Okay, so if we talk about the green, we have 1, we have 2, and we have 3. And also we have subdivided them into 3 subwaves. So let's just call this as 3. Now you see the price coming down, that you should be able to understand that the correction is happening. So this is wave 4. Okay, so there definitely is ABC in there. We are not going into corrective patterns yet. We are just discussing the impulse. So 3, 4, and you see here that it's 5. And can you subdivide it into 3? Yes, we can. So where are the 3? Started from here. You see the first, very impulsive. 2. Third, less impulsive, and 5th as the weakest. Now what you see here, a rising wedge, right? Let me just draw it for you. If we combine the highs and lows, can you see the rising wedge? Let me just change the color, or in fact, let me just draw the wedge just to make sure that it's clear. This was wave 1, this was 2, this was 3, this was 4, and this was 5. So because this pattern occurred on the last and final wave, that's why we are calling it as ending fifth wave diagonal. Now what I said, what happens when we see the diagonal? Well, we try to short it. So you will see that it's happening. You will count the waves and you will ladder your shorts here. I will tell you exactly what it means when we move on towards the training session. But yes, let me just move it to red color. So I will short the market here and let's see what happens to the market. Let's just play and see. So we said the market should drop from there. So there you go. Now, can you see I don't stay in the trade for this long, but can you see that how long this trade was? This can be a life-changing trade if you are trading on the higher time frames. Let's just see how much it was. If we entered here, it was 52% drop. Let's discuss about a couple of more variations of Elliott Wave that I personally like to trade, and those are also highly profitable. I will give you an example of the SHIB trade that I took and how much beneficial this can be. So when we talk about Elliott Wave, we have another variation that we call as extended waves. So what does this mean? By extended wave, I means that sometimes what you will get is you'll get a third wave as an extended. That is a huge wave, a very intensive, very aggressive wave. Now, what happens as a result? That third wave is very aggressive. What happens is that the fifth wave becomes truncated. By truncated, I means it fails to pass the price range of wave 3. Now, sometimes it almost touches the same price range, and sometimes it even falls lower than wave 3. Why this happens? Because wave 3 becomes very aggressive wave. Now this phenomena, sometimes the retail traders, if you watch them, they call it a double top. So a double top means that when the price touches the same area twice. So this again is a bearish pattern and the price is expected to go down. But we now know that 5 Elliott wave structure has been completed. So the price has to go down because it has to create A, B and C. So this is one, and same thing can happen for wave 5. That means you will see 1, 2, 3, 4, but an extended fifth wave. Now let's try to see that why the extended waves occur and what actually is inside. So let's go into the details to understand the extended waves. What happens is that you will see clearly 1, 2, 3, 4, 5 in there. You will see clearly 1, 2, 3, 4, 5 in there. But when it comes to wave 5, it starts normally, like it's making a normal fifth wave. So you will see 1, 2, 3, 4 and 5. But instead of completing here, it ends up getting extended. This becomes 1, you see 2, you will see again a 3, a 4, a 5. So the fifth wave ends up creating 5 waves inside. So 5 sub waves inside. That's what happens when we say it's extended fifth wave. And same will happen if the third wave is extended. So instead of completing and correcting here, it starts creating 5 sub waves, right? Let's go and see an example here. So this is Shiba Inu, very famous coin in the recent bull run. So you can clearly see here, if you go to the bigger picture, you can clearly see the 3 sub waves. Let's maximize the chart. If you see this, you can't call this as 1 and 2 because the price came lower, and we said the price cannot retrace wave 1 by 100%. So clearly this is a failed wave, so you cannot say 1 and 2. So that means that the impulse has not started until here. But when price again tried to go up, it came down, did not retrace wave 1 by 100% and then broke the high of wave 1 again. That means the impulse has started. So we can start counting our waves. Now let's count. So we have 1, 2, we clearly have a 3 here, we clearly have a 4 here, right? And we have an extended fifth wave, a huge fifth wave. So this extended fifth wave was the wave that I caught actually. I entered SHIB here and I will tell you exactly how we can subdivide it. So let's just draw a box here just to see that what is the area that we are trying to inspect. Let's just change the color and the opacity. Let's just move this wave also and try to subdivide this area. So if you see here, let's go down. Now you see we can't see the clear picture. So I have to go down to the lower time frame. Let's go to the 1 hour chart. So now this is the box that we highlighted. And let's try to count the waves. Let me just lock this box so it doesn't move. And let's divide it. Now if you see here, we definitely have wave 1 and here we have wave 2. This is wave 3, this is wave 4 and this should be wave 5, right? So what happened that the fifth went up there and we created 1, 2, 3, 4 because the third was very extensive, fifth became truncated. The same idea that we were discussing before. So we have 1, 2, 3, 4, 5. So instead of completing the structure here, SHIB created 5 more waves. And as a result, this became extended fifth wave. I entered SHIB around here when I saw that, I think here, when I saw that the first wave is being formed. And I kept the trade until 8.8. If I remember it correctly. So this was the price, I think it was 88, somewhere here, this green line. So if you see this was almost 200%, 230% gain. Why it happened? Because I knew that there is a phenomena of extended fifth wave. Now, how you can trade this? Of course, you are not sure it's going to make an extended wave. Well, the best way to do this is that you enter the trade. For example, we entered here after knowing that the impulse has started. Let's say we entered our trade here. What we'll do, we'll first count the normal 5 waves. So expecting that it will not be the extended wave. So where you will exit the trade if you are just counting it normally? Well, we will exit here. So if this is wave 1, this is wave 2, somewhere here. This is wave 3, this is wave 4, this is wave 5. This is wave 5 in fact, right? So we know that market should go down from there. So what I do most of the time is I don't exit 100%. Means I will take my profit here, of course. I will sell at least my 60 or 70% here, but I will stay in the trade. So the rest of the 30% I will ride in case it becomes extended. So that's the way how you trade in a bull market when you know that the coins are pumping quite heavily. You take your share, of course. You don't forget to take the profits because it's a great habit to take profits. Sometimes you never know that the price can drop suddenly and you may be counting it wrong. So always take a profit at a certain level, but leave the rest of your money inside so that if the market pumps, you just ride that wave and take the profit. So the moment I knew this is becoming extended, I knew that this is now 1, 2, there will be 3, there will be 4, and there will be 5. So I was counting it and I exited it right here on the top. Just try to understand it. The more we move on into the depth, the more we will start drawing on the charts, things will start getting clear for you. But from now on, you should try your best. Open the chart, try to count the waves and see if you are right or wrong. Okay.